I'm Kimberly Ferguson, CEO and founder of Emerald Expectations Accounting. I'm so happy that you're here. The Emerald Corner is a place where life and business meet. So I want to help you have a successful small business while maintaining life with your loved ones. Today's video is another episode of Tax Tip Tuesday. So, Tax Tip Tuesday, for those of you who don't know, is where I share with you tips and tricks to prepare for your taxes, to save money on taxes, and to answer your tax questions. So, if you have a specific tax question you want me to answer, make sure you drop that in the comments below, okay? So today's question does actually come from one of you. So this question is, so many times I hear friends or fellow employees speak about trying to avoid doing too much overtime so that they can avoid paying more taxes. Can you explain tax brackets and how it affects the average hourly worker? And how taxes are deducted when you do overtime and enter into a new tax bracket? I don't think very many people understand how this works, and it would be great if you could simplify it. Well, let's see what I can do. All right, so first of all, let's think about tax brackets as buckets rather than brackets, okay? So the way that these work is, let's say that you're a single individual in 2024, okay? So first of all, when you think about your income, this is your top line income, okay? That is your salary, your hourly wage, whatever it looks like. Let's say you make $35,000. You can be paid hourly or via salary, doesn't matter, because at 35,000, most likely you are not exempt from overtime. Okay, so we'll keep that in mind. So what is your taxable income? Your 35,000 is not your taxable income. Okay, you do have a standard deduction that you are able to take out of that in order to get your taxable income. Okay, so like I said, you're a single person who makes $35,000. You can now deduct $14,600. That's your standard deduction from that money to figure out what your taxable income is. Now, maybe you can itemize your deductions and that will give you even less taxable income, but let's just go based off of the standard deduction for now. So in this case, 35,000 minus 14,600 is $20,400, okay? So each of these brackets is a bucket, right? So the first bucket is $0 to $11,600, okay? So $11,600, you get a 10% tax rate, okay? The next bucket is $11,601 to $47,150, okay? So that tax bucket is 12%. So in this case, that is where you land. So your $20,400 taxable income, you land in the 12% bucket, okay? The next one is $47,151 to $100,525. And that tax bucket is 22%, okay? Now, that's gonna cover most of the people in the middle to lower classes, so we'll stop there. But the brackets do go up 24, 32, 35, and 37%. So, fact or myth, as you make more money, you pay more in taxes. You do, it's true, okay? So once you get to that 37% tax bracket, you're making over $600,000, you're paying 37% in taxes, okay? That's a lot more than 12. So focusing on our three buckets here, okay? So you're in the 12% bucket, okay? So when you work overtime, you're gonna be charged tax in that bucket all the way until you make it to $47,000. So you're gonna have to make $27,000 in overtime to get to the next bucket. Okay, to get to the third bucket over here, you're gonna have to make $27,000. Most likely you're not gonna get to $27,000. Most people don't work that much overtime. But let's just say by chance you do, okay? Maybe you work a lot of overtime, okay? So if you do, what's gonna happen is any money over $47,000 is gonna move into that 22% tax bracket. So your payroll system should adjust and increase the tax that's withheld. So yes, if you work overtime, you're gonna get more taxes taken out, and that is once you make it to $27,000 in overtime, okay? Now, obviously, not everyone makes $35,000, so your example might be a little bit different, but you can do some quick math, take your salary or your hourly wage, minus that 14,600 if you're single, double it if you're married, and then that is your taxable income, okay? So while you are going to have taxes taken out of that overtime, it is going to be at the same rate as all of the rest of your salary or all of the rest of your hourly wage. So it's kind of a myth that you work overtime and you get taxed more. Now, what you might possibly be thinking of is a bonus. So typically speaking, bonuses are taxed at 22%. So if you're in the 12% bracket normally, you're going to be taxed in the 22% bracket. So it might feel like you're getting a higher tax there. However, you paid this early, but that doesn't mean that's actually the tax you owe, okay? So as long as you don't get over $47,000 and you're not pushed into that third bucket, you're still gonna be in the 12% tax bucket. So that means your bonus is actually taxed at 12% and you're gonna get that 10% back when you file your tax return. Now, depending on how lenient your payroll provider is, it's possible that you could get an adjustment in your taxes for a bonus payroll, but most likely not. So you'll just be able to claim that on your tax return at the end of the year, and then you'll be able to get that money back come April 15th. So hopefully that answers your question, and I was able to simplify things just a little bit for you and your coworkers and friends. So thank you so much for spending just a couple minutes of time with me today. I hope you have a fantastic day, and I will see you in my next video.